There's a chart, one single chart that I'm going to show you in this video that proves beyond any doubt that the US dollar is in its terminal phase of collapse. And when you understand what this chart is telling us, you'll realize that silver isn't choosing between $25 or $50. It's choosing between $25 and $250 or higher. This isn't about normal market cycles or technical analysis or short-term trading. This is about the mathematics of currency debasement meeting the physics of limited supply. And the chart that shows this convergence is so clear, so undeniable, that once you see it, you can't unsee it. The dollar is dying. Silver is the lifeboat. And the repricing that's coming isn't a matter of if, but when. And the magnitude is going to shock even the most bullish precious metals investors. Stay with me, because what I'm about to show you will fundamentally change how you think about your wealth, your savings, and where to position yourself as the greatest currency collapse in history unfolds in real time. Welcome to George Vance Live, where we decode the charts and data that reveal the truth about currency collapse and wealth preservation. If you're new here, subscribe immediately and turn on notifications, because the chart I'm about to reveal is the single most important piece of financial information you need to understand right now in 2026. Let me show you the chart that changes everything. This is a chart of M2 money supply, which is the total amount of dollars in circulation, including cash, checking accounts, savings accounts, and money market funds, divided by the total above-ground silver supply available for investment. What this chart shows is how many dollars exist for every ounce of investable silver. In 1980, at the peak of the last major silver bull market when silver hit $50, there were approximately $2,500 in the money supply for every ounce of silver. Today, there are over $50,000 in the money supply for every ounce of silver. That's a 20-fold increase in the ratio of dollars to silver. Now let me explain why this is so significant. If you adjust the 1980 silver price of $50 for this 20-fold increase in money supply, accounting for all the dollars that have been printed since then, the equivalent price today would be $1,000 per ounce. That's not a typo. $1,000. But wait, you might say silver is only at $26 today. That means silver is 97% undervalued relative to the money supply. It's the most undervalued asset in the financial system by a massive margin. Nothing else comes close to being this far below its inflation-adjusted, money supply-adjusted fair value. But here's where it gets even more compelling. The M2 money supply isn't static. It's growing exponentially. From 2020 to 2022 alone, the Fed increased M2 by over 40%, the fastest expansion in peacetime history. Currently, M2 is growing at about 7 to 10% per year. Meanwhile, the investable silver supply is essentially flat or declining. Mining production is stagnant. Industrial consumption is rising. The amount of silver available for investment is not growing and may actually be shrinking as it gets consumed in solar panels, electronics, and other applications where it's not economically recoverable. So you have dollars increasing exponentially while silver supply is flat or declining. The ratio of dollars to silver is growing every single year. The chart shows this divergence getting wider and wider. It's a mathematical certainty that either silver prices must rise dramatically to narrow this gap, or the dollar must collapse in purchasing power, or both. And that's exactly what the chart is telling us is coming. Now let me layer in the second critical chart that confirms this analysis. This is the dollar index adjusted for real purchasing power. The official dollar index measures the dollar against other major fiat currencies like the euro, yen, and pound. But all those currencies are also being debased. So measuring the dollar against other dying currencies tells you nothing about the dollar's real value. What matters is what the dollar can actually buy in terms of real goods, energy, and commodities. When you adjust the dollar index for inflation and purchasing power, you see that the dollar has lost over 98% of its value since 1971 when Nixon closed the gold window and the dollar became a pure fiat currency. But the decline is accelerating. In the 1970s, the dollar lost purchasing power at maybe 7 to 10% per year. In the 1980s and 1990s, it was 3 to 5%. The 2000s and 2010s saw 2 to 4%. But since 2020, real purchasing power destruction has been running at 8 to 15% per year, depending on what you're trying to buy. The rate of decline is increasing. This is the signature of terminal phase currency collapse. The early stages are slow, the middle stages are steady. The final stage is exponential decline. We're entering that final exponential phase right now. When you overlay the dollar purchasing power chart with the dollars per ounce of silver chart, you see perfect correlation. As the dollar loses purchasing power, the ratio of dollars to silver increases, meaning it takes more and more dollars to buy the same amount of silver. But because silver prices have been suppressed through manipulation in paper markets, the silver price hasn't kept pace with the money supply expansion. This has created a massive disequilibrium that must correct. When it does, the price adjustment will be violent and swift. Let me show you the third chart that completes the picture. This is silver's share of global financial assets over time. In 1980, at the peak of silver's bull market, silver represented about 1.5% of total global financial assets. Today, silver represents less than 0.1% of global financial assets. It's essentially been forgotten by institutional investors and wealth allocators. The total value of all the silver in the world available for investment is maybe $50 billion. That's less than the market cap of many individual companies. It's a rounding error in global finance. But here's what makes this so explosive. If silver were to simply return to its 1980 share of global financial assets at 1.5%, with today's much larger global asset base, the silver price would need to be around $400 per ounce. That's a 15-fold increase from current levels, and it's just to get back to the historical average allocation. If we get an overshoot, which typically happens in commodity bull markets, silver could go to $500, $600, even $1,000 per ounce before the mania phase exhausts itself. The math is undeniable. Silver is absurdly undervalued relative to the money supply, relative to its historical share of financial assets, and relative to its purchasing power through history. The only reason prices are still at $26 is because of paper market manipulation and because institutional investors have not yet recognized what's happening. But that's changing, and when the institutional money starts flowing in, the move will be parabolic. Now let me address the critical question: why silver and not gold? Both are precious metals. Both are monetary metals. Both benefit from dollar debasement. But silver has several factors that make it superior for this particular moment in history. First, silver is far more undervalued than gold relative to historical ratios. The gold to silver ratio, which measures how many ounces of silver it takes to buy 1 ounce of gold, is currently around 85 to 1. Historically, it's averaged closer to 50 to 1, and in nature, silver occurs about 17 times more abundantly than gold. A reversion to historical norms would require silver to dramatically outperform gold. Second, silver has massive industrial demand that gold doesn't. Gold is primarily a monetary metal and a store of value. Silver is both a monetary metal and a critical industrial commodity. The industrial demand creates a floor under silver prices and means that supply destruction when mines close due to low prices is not easily reversed. When silver prices rise, it takes years to bring new mine production online. Meanwhile, industrial users need the metal now. This creates inelastic demand that supports much higher prices. Third, silver's market is much smaller than gold's. The total value of investment-grade silver is maybe $50 billion. The total value of investment gold is over $2 trillion. Because silver's market is 40 times smaller, it takes far less capital to move the price dramatically. When investment flows start rotating into silver, the percentage gains will be much larger than in gold simply due to the smaller size of the market. This is basic liquidity dynamics. Fourth, silver has been more heavily manipulated than gold through the paper markets. The JP Morgan manipulation, the spoofing, the concentrated short positions, all of this was more extreme in silver than in gold. When that manipulation ends, the snapback in silver will be more violent than in gold. Gold might double or triple. Silver could go up 10 times or more as it reverts to fair value and then overshoots. Let me show you what the chart says about timing, because people always want to know when this repricing will happen. The dollars per ounce of silver chart shows that we're at the widest divergence in history. More dollars, chasing the same or less silver than ever before. Historically, when you get to extreme divergences like this, the correction comes within 1 to 3 years. We're in that window right now. The catalysts that could trigger the repricing are all around us. A currency crisis, a debt crisis, a major bank failure, a geopolitical shock, Basel III implementation, Chinese export restrictions, industrial shortage. Any of these could be the spark. But here's the key insight. You don't need to time the exact catalyst. You just need to be positioned before the move starts. Because when it does start, it's going to gap up so fast that there's no opportunity to enter at reasonable prices. You'll see silver at 26 on Friday and 40 on Monday, then 60 by Wednesday, then 100 within weeks. The moves in precious metals bull markets are not linear. They're exponential. Months or years of consolidation followed by explosive rallies that triple or quintuple prices in a matter of weeks. The chart tells you we're in the late stages of consolidation before the explosive move. The dollar is terminally sick. The money supply is exploding. Silver supply is constrained. Industrial demand is inelastic. Investment demand is waking up. Manipulation is ending. All the pieces are in place. The chart is screaming at you to position now before the crowd figures it out. Now, let me show you how to use this chart to make specific investment decisions. First, the chart tells you that physical silver is the single best risk-reward investment available today. If silver is 97% undervalued relative to money supply and could realistically go to $250 or higher, that's a potential 10-bagger from current levels with limited downside. Even if the chart is wrong and silver only goes to 75 or 100, you've still tripled or quadrupled your money. The asymmetric risk reward is extraordinary. This means you should be allocating aggressively to physical silver if you haven't already. I'm talking about 15 to 25% of your liquid net worth if you're a serious investor who understands this opportunity. Yeah, that sounds aggressive, and it is, but when you have an asset that's 97% undervalued with a clear mathematical path to 10 times upside, aggressive allocation is justified. Buy American Eagles, Canadian Maples, bars from reputable refiners. Take physical possession or store in allocated accounts you control. Second, the chart tells you that silver mining stocks are going to see unbelievable gains when the repricing happens. A company like First Majestic producing silver at $18 to $20, cost that sells for $26, today makes $6 to $8 per ounce profit. If silver goes to $250, they're making $230 per ounce profit. That's a 30-fold increase in profit margin. When earnings multiply by 30, stock prices don't just double or triple, they go up 10 to 20 times or more. The leverage in mining stocks is exponential in a move like this. This means building a portfolio of quality silver miners is critical. First Majestic, Hecla, Kerr, Pan American Silver, Mag Silver, Endeavor Silver. These are companies with real mines, real production, and real leverage to silver prices. When the chart's prediction plays out and silver reprices to $250, these stocks could easily go from $10 to $100 or $200. Some junior miners with development projects could go from $2 to $50 if they prove up resources during a price mania. Third, the chart tells you that timing your exit is going to be critical. If silver goes from 26 to 250, that's a life-changing gain. But if you get too greedy and hold for 500 or 1,000 and the market tops at 300, you've given back a lot of profit. The chart shows that when these major repricings happen, they tend to overshoot and then correct sharply. Silver went to 50 in 1980 and then crashed back to $8 over the next 2 years. Silver went to 49 in 2011 and crashed to 14 by 2015. So you need to plan for taking profits along the way. My suggestion is to sell 25% of your physical silver if it hits $100. Take another 25% off at $150. Another 25% at $200. Hold the final 25% until you see clear signs of a mania top, blow-off volume, media coverage, your taxi driver giving you silver tips. Then sell that last 25% even if you think it could go higher. For mining stocks, use trailing stops to lock in gains as prices rise. Don't get so married to a target that you refuse to take profits when the market is giving you incredible gains. Fourth, the chart tells you that converting some silver profits into other hard assets at the peak makes sense. When silver hits 250 or wherever the top is, you've made extraordinary gains in dollar terms. But remember, those dollars are dying. The chart proves it. So don't just accumulate dollars from selling silver. Convert some of those gains into productive assets. Farmland, rental real estate, ownership in businesses, things that produce income and have real-world utility. Use the silver windfall to build lasting wealth, not just to accumulate currency. Now let me address the skeptics who will say this is too good to be true, that if silver were really 97% undervalued, everyone would be buying it. The answer is that most investors and institutions don't look at the charts I've shown you. They don't compare money supply to hard asset supply. They don't adjust historical prices for monetary debasement. They look at recent price trends and technical charts and what other investors are doing. They follow the crowd. The crowd is in stocks, real estate, crypto. The crowd has forgotten silver exists, but markets don't stay irrational forever. Eventually, value gets recognized. The investors who profit the most are those who recognize value before the crowd, buy when assets are cheap and unloved, and sell when assets are expensive and everyone wants them. Right now, silver is cheap and unloved. The chart proves it's undervalued. The crowd will figure it out eventually, probably when silver has already doubled or tripled, but by then, the easy money has been made. The extraordinary gains go to those who buy now, while the chart is screaming opportunity and everyone else is ignoring it. Let me also address the argument that technology will replace silver and reduce demand. Yes, some substitution is possible in certain applications, but silver has unique properties that make it irreplaceable in many uses. It's the most conductive metal for electricity and heat. It's the most reflective metal for light. It has antimicrobial properties. These physical characteristics can't be replicated by cheaper alternatives in many high-tech applications. The solar industry has tried for years to reduce silver content in panels and has made some progress, but they still need silver. Electric vehicles need silver. 5G needs silver. The technological trends are increasing silver demand faster than substitution is reducing it. Moreover, even if industrial demand flatlines due to substitution, the investment demand reawakening alone is enough to drive silver to 250 or higher. Remember, silver is 0.1% of global financial assets. If it just goes back to 1%, you get a tenfold increase in price from investment flows alone, without any increase in industrial demand. The chart shows silver is undervalued from a monetary perspective independent of industrial demand. Let me share one final chart that ties everything together. This is a chart of silver prices adjusted for the total debt in the system, both government and private. Total debt in the US is now over $100 trillion when you include federal, state, local, corporate, and household debt. In 1980, it was about $5 trillion. That's a 20-fold increase, the same as the money supply increase. If you adjust the 1980 silver price of $50 for this debt increase, you get the same answer, $1,000 per ounce in today's debt-saturated economy. The chart is consistent across multiple methodologies. Silver is catastrophically undervalued relative to the expansion of monetary aggregates and debt. This debt can never be paid back in real terms. The only way out is inflation and currency debasement. The Fed will print whatever it takes to keep the system from collapsing, which means more dollars chasing the same amount of silver. The chart of dollars per ounce keeps going up. The only way for the ratio to normalize is for silver prices to explode higher. It's not a matter of if, but when, and the chart suggests when is very soon. Here's what I want you to do after watching this video. First, go look at these charts yourself. Pull up M2 money supply data from the Federal Reserve. Calculate the amount of investment-grade silver in the world, probably around 2 billion ounces. Divide M2 by silver supply. Compare the ratio today to 1980. Verify for yourself that I'm not making this up or exaggerating. The numbers speak for themselves. Silver is 97% undervalued relative to money supply. That's mathematical fact, not opinion. Second, make a decision about allocation. If you believe the chart, if you believe the math, then you need to act on it. That means buying physical silver and silver mining stocks in meaningful quantities. Not 1% of your portfolio, not a token position. I'm talking about 15 to 25% if you really understand the opportunity. This is a once-in-a-lifetime moment where you can see the future in a chart if you're willing to look. Don't let it pass you by because you were too timid or too skeptical. Third, prepare mentally for volatility. The path from 26 to 250 is not going to be smooth. There will be pullbacks. There will be days where silver drops 10 or 15%, and you question whether the thesis is wrong. There will be periods of frustration where nothing seems to be happening. But if you understand the chart, if you believe the math, you can hold through the volatility knowing that the destination is significantly higher prices. Have the conviction to be a holder, not a trader. Fourth, share this information. Send this video to friends and family who care about preserving wealth. Post it on social media. Talk about the charts. The more people who understand that silver is 97% undervalued, the faster the market recognition happens, and the sooner the repricing occurs. This isn't about pumping your position. This is about education and helping people protect themselves from dollar collapse. The chart proves the dollar is dead. The math shows silver is undervalued by 97%. The historical comparisons show $250 or higher is not just possible, but likely. The question is not whether silver is going to 25 or 250. At 26 today, the downside to 25 is 4%. The upside to 250 is 860%. That's not a hard decision. The chart has given you the answer. Silver at 25 or 250? The chart says 250 and beyond. Position accordingly. Share this video everywhere. This is information that could change lives. Subscribe to George Vance Live for ongoing coverage of the dollar collapse and precious metals repricing. Comment below and tell me if you're taking action. Are you buying physical? Loading up on miners? What's your allocation? The chart doesn't lie. $50,000 in M2 for every ounce of silver compared to $2,500 in 1980. The ratio is screaming at you. The dollar is in terminal decline. Silver is the escape hatch. The repricing from 26 to 250 or higher is coming. The only question is whether you'll be positioned to profit or left behind, watching others build generational wealth from the opportunity you had in front of you but were too afraid to take. This is George Vance Live. The chart proves it. The math confirms it. The dollar is dead. Silver is the answer. $250 or higher is the destination. Don't say you weren't shown the evidence. Don't say you didn't have the opportunity. The chart is clear. Make your choice now while there's still time. Stack silver like your financial future depends on it, because according to the chart, it absolutely does.